advisor and partner with Vivaldi Capital Management, and welcome to today's conversation with Byron Udell. Byron is the founder and former CEO of AcuQuote, a life insurance company he sold at a very opportunistic time in 2021, right before the private equity and M&A markets seized up. Byron, welcome to today's conversation.
Good to be here.
Well, I'm looking forward to hearing more about your story of how you built the business and how you sold it, both unique and worth sharing. And you and I have spent a fair amount of time together over the past couple of years over the phone. We share a lot of similar interests: outdoors, mountain biking, skiing. I would say out of a lot of our conversations, the one thing that really sticks out to me is your passion for the life insurance business. So curious how that got started and what got you interested in building a business in the life insurance niche.
That's an interesting question. I do believe that I have a truly unusual passion for a product that most people view as a boring product. They don't really have a lot of passion for it, even people that do it for a living. Many people that do it for a living don't even admit that's what they do. If you ask them what they do, they'll say, I'm in the financial services business, or I do financial planning, estate planning, retirement planning, investment planning. Dude, you sell life insurance, just come out with it. It's no big deal. But once I understood what I started doing, and it took a while. I mean, it took me 6 or 7 years of doing it before I sort of fell in love with it.
And what year did you start?
I started in 1986. I graduated law school in 1984. Passed the bar, tinkered around with practicing law, tinkered around in real estate for a while, and then ultimately settled in on a career selling life insurance. I started with a big mutual company, came out of the gate fairly strong. It was rookie of the year, all that crap. And then I hit the wall after I sold everybody that I knew, or sold everybody that I thought I could of the people that I knew. I had to find other ways, and eventually migrated to doing mass marketing. Did some things that they told me could never be done. For instance, advertising life insurance on the radio. They said, you can't make money advertising life insurance on the radio. And I said, okay, that's what I can't do. That's what I'm going to do. And then I started getting busier and busier. And right around 1994 was when I hired the first employee.
When did you leave the mutual company?
No, I still had a relationship with them until the late 90s, where we parted company because we weren't really doing much together. I was doing millions of dollars a year, and not very little of it was with them. So they decided it was best if we part company. I agreed, so I resigned. But meanwhile, I was building my company, and we were doing millions of dollars of business, so it didn't bother me. And when I started building it, that's when you start growing, when you start expanding and multiplying yourself. I hired an assistant, then I hired another assistant, and I thought, wow, who has 2 assistants? Then I hired a third assistant, and people were like, oh my God, this is crazy. And then I finally hired another person to help with sales, and the company started to grow. And I think what the most unusual part about it was that we did it and grew, and it's we being me. There was no partners or anything, entirely without any equity raise. There was no raising of any money. And so I built it entirely organically. We didn't do a debt round. We didn't do an equity round, never did. And the company was built organically, and we were growing, really at the beginning, we were growing at 100%, 50%. I think all the way up until the 2000s, we had an average annual compound growth rate, or CAGR, they call it, of something like 60%, and without anybody else's money, which is kind of a unicorn to build it that way.
And how come you decide, because when we've had conversations, you mentioned that a lot of your competitors early on started to raise capital.
Yep. And
for many, it was to their detriment.
I just didn't know what I would do with the money. I had people calling me, throwing money, saying, if we can get you money, what would you do with it? I'm like, you know what? I don't know. I'm growing as fast as I can. It was very, very hard to hire people in the late 90s. This was the go-go days of the internet. And, kids coming out of school were saying, hey, if I come to work for you, how much will I make? And how much vacation time do I get? And do I get equity? I'm like, oh my God, this is insane. They don't know anything. And so that was a frustrating time to try to build. And if I had more money, I don't know how I would have hired anybody else. I mean, we were hiring as fast as we could in the late 90s, trying to grow. And so I didn't know what I would do with the money. I mean, I had a number of competitors that raised money and spent a bunch of money on advertising campaigns at giant advertising firms and ended up losing a ton of money, spending $3 to get $1 in sales. It just didn't make sense to me. So what it forced me to do was be prudent, because it was my own money. And I was very, very, very careful about how we grew, made sure we didn't waste money on anything that didn't work for long. And the company grew. I mean, it just took on a life of its own. It started as a one-man show, and by the time I sold it, we were anywhere from 100 to 250 employees during most of the 2000s and 2000 teens. It became quite a big company. One of the largest companies in the country that did what I do. And make no mistake, we weren't a life insurance company. We were a life insurance brokerage firm. So all of our revenue, 99.9% of our revenue, came from commissions from selling life insurance, which is the way the business works.
And how much life insurance did you sell in total over the course of your career?
Over $100 billion of life insurance in force by the time I sold the company. 250,000 or so clients, which is a huge number. I remember when 9/11 happened, it was kind of an interesting point in the middle of my growth. And we heard that somewhere in the vicinity of 3,000 or 4,000 people perished on that day, a day that we all remember, just a crazy, just hole in everybody's heart. And I was thinking, what are the odds that we had a client that died in that? And I did the math nationwide. I figured out how many clients we had in New York. And I said, you know what? There's a really good chance that we're going to have one or two. And it turns out we had one. Turns out we had one.
And I'm sure that made a huge difference for the family.
It was very interesting because that particular case, they originally had bought, I think, $300,000 of coverage. And we were in the process of getting them another $250,000 when they died. So it was interesting. And they actually had put the deposit down, or so they bound the coverage with all the conditions that were required, and they ended up collecting on both, which is pretty amazing. So that felt pretty good, but it's never enough. I mean, $550,000 for someone that works in those towers in New York. I mean, it's not going to replace the economic value. Yeah, for sure.
Yeah, it makes me think about my situation. I got two young ones at home, and before you have kids, you don't think too much about life insurance.
Who would? Yeah.
But now that you understand that if something happens to me, what impact that would have on their lives financially for the rest of their lives.
Well, you can't replace a father. I can't replace a father. I can't replace a husband. But what I can do, if people let me, is replace the economic value of someone's life. And I often ask people, if I were to write you a check right now for all the life insurance that you own, so think about how much you own. Just put it in your head. Say, I got some at work for free, and I got some.
You're going to tell me I don't have enough. That's what you're going to tell me.
Nobody has enough. But if you add it all up, would you work the rest of your life for no pay?
Would I? No, absolutely not.
If I just gave it to you.
Oh, if you just gave me the
gave
money,
you that money.
Would I work for the rest of my
all
life?
the life insurance you own? I don't know what you have, $1 million, $5 million,
No,
$10
absolutely
million?
not. No.
Right.
Not
And so the question is, like, if you die, that's what your family has to do. They're not going to get another dollar. The day you die, you're going to get your final paycheck, and that's the end of it. And so if you had a house let's say your house is worth $1 million, and let's say you had a property casualty agent that said, I think we should insure you for $250,000. If your house burns down, if a plane crashes into it, and the house is totaled, you would get a check for $250,000. You'd be like, you'd be like, I need a new agent. My agent's an idiot. Why would I insure an asset that's $1 million asset for $250,000? That's crazy. But the biggest asset, the greatest asset that you have, you're a young guy, is your ability to make a living and what you're going to earn the rest of your life. Your future earnings are the single biggest asset you have in way more than anything you may have saved, anything you've accumulated, your house, your car, your savings accounts, your investment accounts. Add them all up. They don't add up to what you're going to make the rest of your life. And so that's what life insurance can do. And the thing is, for a young guy like you, it's 50, 60 cents, $1,000 per year for term insurance. It just makes no sense not to have as much as you can buy.
Yeah. And it's one of the few things that are absolutely guaranteed as long as you make the payments.
That's correct.
Right?
Yeah. Once you get it enforced, they can't take it away from you as long as you make the payments. So if your health changes, they don't change the price on you during the period of time it's guaranteed. You can guarantee your age, you can guarantee up to 40 years. And you can actually guarantee it for life, but in term insurance, it goes up to 40 years.
Mm-hmm. I'm going to jump around a little bit. One thing you mentioned earlier is you started off, you graduated in the mid-'80s as a lawyer from law school. You did some real estate, and then you got into life insurance. Why that jump? Why go to law school and then all of a sudden end up in the life insurance business?
Well, I went to law school because I actually thought I wanted to be a lawyer. I'd seen a bunch of those fun law television shows like LA Law, those kinds of.
Now they have Suits.
Suits was fantastic. I just finished Suits, by the way. I was late to the party for Suits. Suits was kind of like Boston Legal in that it was, a drama, but it was a comedy at the same time. And
they all seem to love their job, though.
Yeah, they make law look so fun. I mean, a case comes in, and then 5 minutes later, they're in court. I mean, it doesn't work that way in real life. And most lawyers never go to court. It's a grind. So I went to law school thinking this is what I want to do. I'll be good at this because I can talk and I can argue and all. But by the time you get out, you realize that's not what it is. And I realized that everybody I knew that was doing it was miserable. And really, income, while it's good, lawyers make a lot of money. They don't make as much as salesmen and entrepreneurs can make. And so I was going to get married. And my future father-in-law said, look, if you're going to get married, you can't be working real estate deals, doing a deal every few months. You need to have a real job. So I thought, all right, well, maybe I'll check out. So I interviewed at some of the firms like you work for. Interviewed at Merrill Lynch and Shearson at the time. And everybody wanted to hire me because I had a pretty good resume. I had sold things early on in my life. I sold door to door. And I ultimately took the job at New York Life. I don't know why I did. My dad worked there. So I thought, okay, at least I got somebody's got my back in terms of learning how this game works. And they were already getting in securities too. They had mutual funds and things to sell. So I thought, I'll try this. I didn't have any particular burning desire to get into it. In fact, when you go to a kindergarten class and you ask the kindergartners, what do you want to be when you grow up? They'll say, I want to be a fireman. I want to be a doctor. I want to be a lawyer. I want to be a painter, whatever. There's not one in the entire world that says, I want to be a life insurance salesman. So it's unusual. The industry is much maligned, much misunderstood. But at the end of the day, we're a godsend to our clients. We really are. I mean, when someone dies, is the lawyer, the family important? Yes. The accountant important? No. I got to tell you, you go to a funeral for one of your clients and there's 300 people at the funeral. If it's a big one, I was just at one a couple of weeks ago. There was only like 30, 40 people there. But when you go to a big one, everybody's there. They're bringing flowers. They're bringing corned beef trays. They're bringing cookies. They're bringing GoFundMe donations. I'm the only guy that's bringing a check for $500,000 or $1 million tax-free. I mean, the surviving spouse, the widows, they're looking for me. I'm the most important person in their life instantaneously when the breadwinner dies. It's an amazing responsibility. It needs to be done right. And, if we do nothing else right, we got to get the face amount right. What kind you buy, what company you buy, sure, we want to find you the best deal. And I made my living finding people the best deal on life insurance. But at the end of the day, we got to get that face amount right.
Well, it's a good feeling to be able to deliver that at that time.
It's one of those MasterCard priceless moments.
Yeah.
I can't put it into words how important it is.
Yeah, absolutely. And because very few people actually go out searching, I feel like, for life insurance. It usually has to come to that.
It's a product that's sold, not bought, generally. That's correct. I mean, I took it halfway in that we advertised, and so most of the people that me and my people were talking to on a daily basis, 98% of those, well, almost 100% of them, had reached out to us as a result of some sort of outreach, magazine, newspaper, internet, television, radio, some sort of mass marketing. I'm in the market. I'm looking for life insurance. So we're already looking now. It's just a matter of which one, what kind, and then from whom, and who's going to represent you. We were independent brokers. We had multiple carriers on the platform. I still do to this day. And I still do personal business. Even though I don't own the company anymore, I'm still able to write personal business as long as I don't compete with the company that I sold. I signed a 5-year non-compete when we sold the company.
You mentioned one of your areas of competitive advantage was your focus on cost control.
Yeah, certainly early on. As you get larger, you become less and less disciplined about those things.
Yeah, when you see the revenue peak more consistent.
Yeah, when you're doing tens of millions of dollars, you're not worried about whether someone ordered a dozen too many pens. I mean, I actually get teased about that. I mean, at the beginning, people are like, we need more pens. I'm like, we'll get 12 people here. I just bought 144 pens a year ago. Like, there's no way we used them up. I mean, obviously they're just disappearing. And I'm not buying. I mean, I literally was tight about everything at the beginning. And then I got soft in the later years for sure.
Yeah. Well, that makes sense. If you're starting a business, it's your own capital, and you don't really see the revenue come in that quickly in the beginning. I don't know how it was.
Oh, for sure.
You want to cut your costs. That's just the smart thing to do.
Well, I had no choice. I mean, the way our business works is we get paid as the client pays. So, for instance, if you buy a policy that's going to yield, let's say, $100 a month to us over the next year, because most people pay monthly, let's say my margins were 20%. I've got to pay, $950 in marketing expense, sales commissions, which I annualize for
Were those your margins, 20%, or?
At the beginning, they were bigger than that. At the end, they were zero. But let's say there were 20%. Let's say it's $1,000 is going to come in over the next year. It's going to come in 1/12 at a time. I still have to pay the $800 in marketing. I got to pay the rent. I got to pay for the toner cartridges. I got to pay my commissions to my agents. And so I got to pay that up front. And now I got to wait for $80 a month to come in. I got to pay $800 up front. So cash flow wise, you needed money to be able to grow. And that's why everybody told me you're not going to be able to build this unless you borrow money or raise capital. Somehow I did it. I mean, we just grew prudently. We couldn't grow at 500% a year. I would have needed to borrow money. But at the end of the day, had I grown that fast, I probably would have failed, because when you grow slowly, you make the mistakes that are not as expensive as if you start doing everything big. If it turns out, hey, I just bought a $100,000 ad campaign, it didn't work, you just lost $100,000 or a large portion of it. So having to grow slowly and prudently was actually probably helpful and may have saved me from myself.
Yeah. Why were your margins closer to zero towards the end? You were reinvesting everything back in growth?
No, what happened is more competition. It looked like a blue ocean to people on the outside. Mm-hmm. If you read Blue Ocean Strategy, it's, red oceans are where people are fighting over, scraps, and there's blood in the water everywhere in an industry. When I was doing it at the beginning, it looked easy. So that guy's advertising on the radio or he's on the internet. All he does is take orders all day. Well, not quite that easy, but people thought it was. So people started getting into the industry. And then there's only so many people that will identify themselves at any given moment as being in the market for life insurance. If just a Super Bowl ad, for example, let's say you took every break at the Super Bowl and you spent hundreds of millions of dollars on advertising, there's still only a certain percentage of people that are going to respond to that. And we're all fighting for the same leads. And so the cost of lead generation at the beginning, we did some for free. We would do content creation, things like that. We advertised on Yahoo back in the day, and we had, whatever internet ads we did. The cost of leads were, $1, $2, $5 a lead, no big deal. Leads were just everywhere. And they were cheap, so we didn't care if we burned through them, no big deal. But the end, leads were getting up into the $30, $40 range, and at that price, there's no margin to be had because you can only close a certain percentage of them. And the companies that I was competing with at the end had raised tens of millions of dollars. They were willing to lose money just to drive top line, and it's impossible to compete with that. I'm not going to lose money just to stay around, and so it became much more competitive. Most of those companies have or are going to fail. I mean, a number of them have already failed. We had a number of competitors that came in, starting in the late 2000s, 2005 to 2010, the early 2010s. Most of them, none of them are making money, and many of them have thrown in the towel already. So we were lucky to survive that, honestly.
Well, back to your point, I think you mentioned when we were talking offline that a lot of those are private equity backed, potentially.
Almost all of them.
Yeah.
Venture and private equity backed. They got a good story. We're going to revolutionize life insurance. How are you going to do that? Well, we're going to make it possible for people to go online and get a quote right online. And I'm like, what's revolutionary about that? I've been doing that since 1994. Oh, we're going to make it possible for people to buy life insurance without the traditional medical exam and giving blood and urine. I'm like, everybody does that now. It's not revolutionary, but apparently the audience that these guys do when they go on their roadshow to try to raise money, they're like, oh, wow, that's amazing. And they don't even bother to do any due diligence and check it out and see if what they're saying they're going to do that's revolutionary is in fact revolutionary, which it's not. And so it's amazing how dumb venture money can be sometimes.
Absolutely. Well, that's interesting you say that, because that time you sold it and before that, there was a lot of mania around anything tech-based.
That's correct.
I mean, we're kind of seeing that again with AI.
Yep.
But you just slap on AI or something tech related to a traditional business and you have the wherewithal to get connections to big money. Sometimes you can convince them in those periods.
Just buzzwords is not a reason to invest. I mean, you really have to have something concrete that actually is good. And people were talking in my industry, oh, we have machine learning. I'm like, machine learning? We're selling life insurance. There's no machine learning. Really, it's not. I mean, but people talked about it. One of my competitors sold in the billions, believe it or not. I mean, with that story. And unfortunately, that particular acquisition has been written down. It was bought by a giant, one of the biggest life insurance companies in the world, paid in the billions for a small company with 100 employees.
And they wrote that.
They've written it down. They're still in business, but not for much longer, I don't think. I don't know. We'll see.
Got it.
I don't think they make money.
So so the story is you started in the business, took you a little time to ramp up, but then you started growing really fast. There was a lot, leads were inexpensive, margins seemed a lot higher. Towards the end, it sounded to get a lot more difficult.
Definitely way more difficult.
You got a lot of cheap money coming in from the outside, a lot more competition.
Driving the cost of our raw material, which is leads, that was their biggest variable cost. If I had no lead cost, business is super easy. If all you do is pay commissions, to your agents, no big deal. But the lead cost was the one factor that squeezed margins.
Yeah, which makes sense because agents really only make money, or you only really pay them if they're producing.
Correct.
So it's all variable.
Right.
Okay. Then, so what led you, is that the reason you decided to sell? What was the reason, or what were the reasons you decided to sell?
I decided to sell, and we decided to start looking when I realized that none of my kids were coming into the business, and I needed some sort of an exit strategy, or I would just work forever till I'm 90. And as much as I love it...
By the way, was that a goal of yours when the kids were younger, to have one of your kids?
That wasn't a goal. It was certainly there for them. They all knew that it was there for them if they wanted it, but I also encouraged them to follow their own dreams, and my kids are all successful. They're all entrepreneurs. They followed into different industries, and two of them actually worked in the company for summer jobs sometimes and got a feel for it, but they just didn't have the passion for it that I did. And they had passion for other things. I certainly wouldn't have wanted to force them to come into the business. And frankly, it's a tough business. I'm glad they didn't come into it. I'm not sure whether it would have been a good idea. But so I thought, you know what, maybe it's time. And so we began to explore. But at the time I was trying to sell it, our margins were gone. We were not making any money. And so there was no opportunity whatsoever to sell to a PE buyer. They're looking to buy earnings. They're looking to do roll-ups. They're looking to do things to make money. Nobody's interested in buying companies that are losing money or breaking even. And so I knew PE was out. Any traditional PE sale that you might find was completely out of the question. There was no way anybody would pay me what it was worth to me, because at the time I knew I could shut it down and I could get a multiple of my renewals, which would have been a lot of money, but nobody would pay that for the going concern. I wanted some value for the going concern. Anybody that bought me, the company that bought me, knew that they had a floor under the value, under which the value couldn't fall, because they could shut it down the next day and just let the renewals come in. So I wanted more than that. And ultimately we did this. The second unicornish aspect of this is that we sold it without an investment banker. We didn't use an investment banker. We knew who the potential strategic acquirers would be, and we romanced them and talked to several of them, ultimately cut a deal without the expense and without the possible leakage that an investment banker... When an investment banker starts shopping a company, it usually leaks out. When I sold my company all the way until the day of closing, the only people that knew were my highest people. All my rank and file people had no idea, just literally. And everybody that I knew told me that was impossible, that it's going to leak out and you better be prepared to explain it. Oh, you're selling the company. That sometimes causes people to lose faith, and things like that. I didn't want it to be out there, and it turns out we were able to pull that off, which is pretty amazing. And I honestly believe that we got a price higher than we could have ever gotten from anybody else.
So without the commission?
Without the expense. I'm not saying investment bankers aren't worth what you pay them. They are, generally, for most companies. But in our case, we didn't need it, and I'm glad we didn't use it. So I thought that was pretty amazing.
How many potential acquirers did you reach out to?
We probably talked to a dozen or so. We reached out to all the usual suspects. We reached out to a number of companies that had raised a bunch of capital and weren't making it. Thought, hey, how would you like to have the expertise of a company that's been doing it for 25 years, 30 years, and is making it? And, we had conversations and we talked about numbers. And at the end of the day, the company that ended up buying us was the right company. And they're doing well because they have access to raw material for nothing, which gives them an advantage. So they're doing well. They kept all my people. The other part, the third part that I think is somewhat unicornish, is that most sales of privately held companies, no matter who you sell to, require an earnout and performance-based metrics in order to get your money. So we'll give you so much money, maybe not all cash, maybe some stock in the new company, and then in order to get the rest of your money, these things have to happen. You need to hit this target, and I'm thinking, I need to hit this target? You're taking control of my company. I'm not going to be calling the shots. I'm not going to determine how the accounting is done. You control everything. And I've heard, I was in a number of groups with other business owners and presidents many of which went through this process. I have friends that have gone through this process, and just it seems like the vast majority of companies that sell that have an earnout as a component of the final payment ends up not ending well. They don't end up getting what they thought they would get. The new company takes it and runs it into the ground, and I was like just not willing to do that. So I thought to myself, well, it's going to be a cash deal. There's no deal. I made it very clear to all the people that we reached out to that if you want to buy it, you got to write a check up front. There was a small holdback, which is customary for reps and warranties, basically to make sure that anything we told them during the process wasn't a lie. We didn't stretch anything. And at the end of the day, because we were privately held, we were never audited prior to the sale. And so they did a full due diligence, a serious due diligence process. I call it a financial colonoscopy, if you will. They had Deloitte come in and look at every single piece of paper and every single receivable and you name it, renewals. They did all the math, and I was pretty convinced that they had seen everything they were going to see. I wasn't worried about it. They withheld, I think, 12.5% of the purchase price for 15 months. They wanted to withhold 20% for 2 years. We ultimately negotiated it down, but they made that payment 15 months and 3 days later. I mean, they made the final payment. It was an all cash deal. I was on Cobra the next day. So here's the keys, here's your money. And I was out of a job. I mean, they kept all my people and I was done. And it was such a, until it actually happens, until the money's in your account, you don't know, because you don't know if the stock market's going to crash 2 days before they're supposed to close. And they're going to say, well, we got to wait and see. We closed December 8th of 2021.
I mean, the timing couldn't have been any better.
Because things did change, in the months to follow, things did change. The cost of money went up. The valuation of deals went down. And I was very, very lucky. I tell people I had a little horseshoe up my ass, but it is what it is. I mean, I feel very fortunate. But those three things, building it without anybody else's money, selling without an investment banker, having it be a cash deal that's fully clean, those three things are pretty unusual. I don't know many people that have done any one of those things, but to have done all three sort of makes me a bona fide unicorn.
Was that the horseshoe?
I don't know that. No, I think the timing of it was somewhat horseshoeish, but
absolutely.
I don't think that the building of the company was lucky. There were a number of people that came in, even when I did, and I thought it was pretty much of a blue ocean. I thought it was easy when I was building it. Like, this is not even fair. They're paying me this much money to do this, and this is so easy for me. Like, how could they pay us this much money? But for others, it was hard. I had competitors that started when I did that failed because they just weren't as disciplined about how to build a company. And now, people said, well, you're going to be bored in retirement.
Well, that was actually going to be my next question is, I work with a lot of clients who sell businesses and they have to transition. How has that been for you?
It's been nothing short of amazing. I mean, I just absolutely love life. I've got kids. I've got a grandson. I love visiting with them. I love all these outdoor sports. I love from snowshoeing to skiing to golf to hiking and biking. And I love to shoot clays and shoot pistols. And there's just so many things I love to do. There's no shortage of things to do. I built a golf simulator in my basement, which is kind of a fun thing to have. I'm absolutely loving it, and I'm not bored at all. So people told me, and I also still sell life insurance. So people still call me because what I've done my entire life sort of defines who I am professionally. People I play golf with, hey, you do life insurance, right? Yeah, I do. Can you help me? Shh, what am I supposed to say? No, of course I can help you. I don't know how not to do that. But so that's still fun. And I can do as much of that as I like. And I've also been brought into other companies to advise and be on boards and things like that because there's no substitute for experience, having seen certain things. And so I've taken positions in other companies, not full-time, day-to-day operational positions, but advisory positions with other companies. And that's fun for me. I mean, sharing expertise is fun. I also have thought about doing some speaking in my arena for other life insurance firms because I get life insurance salespeople pumped up when I talk to them because they're busy grinding away every day. They forget how amazing the product that we sell is. And you spend a couple hours with me and all of a sudden it's like your batteries recharge and you realize, hey, I'm out doing a good thing. I'm not torturing people. I'm helping people.
No, I know I've been on the call with you before. We're talking about life insurance. As soon as I'm off, I'm out reaching out to clients, be like, maybe you should increase your life insurance.
It's always amazing to me how little talk there is about that from people in your industry, because when clients die, if they're worth a lot of money, there's going to be some bills to pay, sometimes estate taxes, and you get paid based on assets under management. So where's that money going to come from to pay the IRS? If they're worth $100 million, it's going to come right out of the money you manage. And on the other hand, if you have life insurance to offset those expenses, not only do you end up managing more money, but a week or two after the person dies, now you have an ability to show up to the family with, hey, here's $20 million. We worked on this with Bill, and we arranged this. You're going to get a bill from the IRS pretty soon, but we've offset it and more. And all of a sudden, now you're the hero instead of someone else being the hero. Plus, there's revenue in it. So, I mean, at the end of the day, it just seems like idiotic for people in the money management business not to look at life insurance differently, as opposed to just sort of, well, only we buy what we need, and we try to avoid that, and there's other ways to do things. There's no other way to do what life insurance does. There's no other way to create money in the tens of millions for pennies that is delivered at the exact moment you're about to get whacked. So, I mean, it's an amazing product. It's just as amazing today as it was when I started. And I don't think most people that sell it look at it that way. I don't think they understand just how amazing the product is. It's almost too good to be true. And by the way, the reason it is that good is because it doesn't work for a lot of people that buy it. So there's a lot of people that buy it and don't die with it. And for those people,
they stop making payments.
Right. They stop making payments at some point, or the policy expires or whatever. If you buy a kind that can't...
That's effectively the arbitrage.
Well, I mean, the people who buy policies and do not die with them end up subsidizing the incredibly high internal rates of return that people who buy it and end up keeping it till they die end up receiving.
And the government technically subsidizes it too by making it tax-free, which makes
That's correct.
It even
The
more
death benefits are tax-free. So you pay all these premiums, and then the policy, let's say you've paid $100,000 in premiums, and the policy, you die, it's worth $1 million. Any other asset, generally you'd pay income tax on that. Where life insurance, it's fully tax-free. So it gets a stepped-up basis, if you will, just like a capital asset.
That gives me an interesting question is, if every single person died with their life insurance policy...
it would cost twice as much.
It would cost twice as much.
It would cost twice as much. They don't earn that much on the money.
They wouldn't make any money at the current rate.
The internal rate of return on a life insurance policy at life expectancy is higher than the insurance company earns on the premiums while they're waiting. So it would not work for them at the current pricing. So if you're smart enough to say, I'm going to buy it and I'm going to die with it, you win the game, and the people who don't die with it end up subsidizing your artificially high rates of return.
What percentage of people don't end up dying with their life insurance?
High percentage, very high percentage. Term insurance, which is probably 90% of what we sold all those years, that is a finite end. It's 10, 20, 30-year term. I think somewhere in the vicinity of 1 to 1.5% of term policies end by paying a death claim. Most of them end by falling off the books. Even permanent insurance, whole life, universal life, variable life, there's lots of different kinds of permanent insurance that are designed to last forever, but people buy them with the best of intentions, and then for whatever reason, they forget to pay a premium. Sometimes their wife runs off with another guy. Sometimes they just lose their job, and it's like, well, do I pay this $9,000 life insurance bill, or do I buy food and feed my kids? Well, I don't know about you, but I'm feeding my kids. I don't blame them. And then it falls off the books. Well, they may buy it back when they get back on their feet, but that original policy was nothing but profit for the life insurance company. So they don't end up paying a claim on that one. Most of them do not end up paying a claim. However, we presided during my career over thousands of death claims because I had hundreds of thousands of clients. So people do die. I could tell you that it's just an amazing product. I mean, the claim comes in. There's no argument like when you have crappy car insurance. You try to make a claim and the car insurance company's arguing, well, you got to go to this body shop and we're not going to reimburse you the whole thing, or, there's deductible. I mean, if you're dead, you're dead. They just pay, and that's it. I mean, it's like there's a check coming. Unless you've defrauded them and lied about, if you have cancer and you don't tell them, then you got a problem. But if you tell the truth and the policy gets issued, you could die in 20 minutes and they'll pay you in 20 more minutes. I mean, it's pretty amazing.
Yeah.
So it just, the product does work. And it's the law of large numbers. They make money. They don't make a lot of money on all the money that's traveling in both directions. But for the people that do die, it's just a godsend. And you don't know when your number's coming up. People, nobody ever seems to die at the right time. And to me, I don't understand people not having it unless they don't care half the country doesn't own any individually purchased life insurance. If they have any life insurance, it's token amount they get free at work. Half the country. I'm thinking, and a lot of my competitors and a lot of the industry for years has been saying, well, how do we get all these people who need life insurance to buy it that don't have it? Well, here's the deal. The only people that buy life insurance are people who care about other people. And so if you're a narcissist and you don't care about other people, nothing I say is going to make sense. And it sounds something like this. They say, well, I don't believe in life insurance. Well, it's not a religion. I mean, you don't believe it. What do you mean you don't believe? Well, you know, my father died and didn't leave anything. It was fine for me. And, you know, I'm thinking, well, you got 3 young kids under 10. If you don't believe in life insurance, that's fine. We can still play golf together. We can still be friends. Just nothing I say professionally is going to make sense to you. And I can't trick you into caring if you don't care. So the reason why half the country doesn't have it is that they don't want it. It's not too difficult to find. It's not too expensive. I mean, a 40-year-old male, the typical middle of the bell curve of life insurance buyers, got 3 young kids in elementary school, let's say at age 40. They can buy $1 million of life insurance with a 20-year guarantee for $650 a year or $60 a month or something like that. $1 million of life insurance. I mean, why not have it? It makes no sense not to have it.
It's a no-brainer. It's
not too expensive. It's not difficult. Nowadays, that 40-year-old, 85% of the time, if they're healthy, they don't even need to be examined. I mean, it's just you call on the phone, you answer a few questions, and you fill out some electronic forms. You hit I agree, and then 2 weeks later, you got your policy, and you electronically pay for it, and you're done. I mean, and if you die, your family's getting $1 million tax-free. You'd have to earn $1.5 million at least to have $1 million left. I mean, that's an amazing thing for, you know, the price of not even a cup of coffee a day. Are you kidding me? I mean, it's an amazing product. It really is.
Well, one thing you got me motivated to do is upfront, as part of our planning onboarding, we always look at life insurance for clients, but we also do an annual follow-up on different planning topics. Like last year we did estate planning. This year we did P&C insurance. Or last year we did P&C in 2023. So this year we'll do life insurance. We'll re-review everybody's life insurance policy.
And I do want to say that, you know, part of what I did, I can take credit for because people were willing to follow me into battle because of my passion. But at the end of the day, that gift allowed me to attract some people over the years. Some people stayed with me for 20, 25 years. And I got lucky. I had some good people helping me along the way. Had I not been me, maybe those people might not have stayed, and maybe people left because of me. I don't know. I'm not perfect, but I was able to attract and retain some people that started at the bottom. In fact, the guy who's the president of the company to this day started with me making, you know, probably $25,000 a year, just didn't know anything about the business, ended up moving through all the jobs and ultimately became the president of the company. So that was really fun. We had people start at minimum wage, doing data entry, ended up being the head of my IT department. I mean, it was pretty amazing how some people were able to keep some people, and some people took that opportunity and grew with us. Other people came and left and used it as a feather in their cap, learned how to do things, and got a lot of successful entrepreneurs that are that were proteges of our system and are out there doing this successfully on their own, and I'm proud of that. I still keep in touch with many of them. One of the things that made me the proudest all those years, this is pretty unusual, is that over the years we had hundreds of people come and go, but we had something like 40 people during the period I owned the company that had come back. So people that have quit or been fired and ended up coming back. That doesn't happen at companies very often. In fact, it's hard to even think of anybody that's ever done that other than at my company, which leads me to believe that when they left, they thought everybody thinks that the grass is greener somewhere else. And when they come back, it's sort of like it's like vindication. Like, you know, okay, well, things weren't quite as easy as you thought they'd be to go do it on your own, and they came back. That was really fun. One guy came back twice, I think. You know, left, came back, left again, and came back again. Can you imagine? That always made me proud. Whenever we'd have a negative Glassdoor review, I always cited that in my response, saying, you know, listen, you know, you may think that the opportunity isn't as good as somewhere else, but at the end of the day, we've had 40 people come back. So, you know, how bad could things be?
It's interesting you say that because you built a platform for people to be successful on. And sometimes when they're successful on that platform and they see that they're giving up more than they think they should be.
Correct. It's
on
exactly
their revenue. They're like, oh, I could do that myself. But they don't realize how valuable that platform is.
Oh my God.
And without the platform, they might be nothing effective.
Well, I mean, most of them don't have the means. They're not willing to risk their
whole
house.
Different skill set.
Yeah,
I mean, whole different skill set.
You have to wear all the hats when you're on your own. When they were working for me, they needed to know their job. If they were in sales, which is what we're generally thinking about and talking about and inferring, in sales, I mean, all they had to do is pick up the phone and get people to say yes. And the rest of it was, and they hadn't taken an application, which was nothing, but the rest of it was done for them. All the lead generation, finding interested parties to talk to, managing the cases, getting the cases to pay, doing the commission accounting, doing the marketing, the HR, the benefits, all the licensing. That was all done for them. Now they got to go out and they got to go get their licenses. That costs, if you want to license yourself in all 50 states in life insurance and you want to be able to advertise on the internet and get leads from all over the country, that's an $8,000 operation, with a lot of paperwork. And then, you have to manage all the cash flow. There's a lot to it. And people found out pretty quickly. And I talked to one last week who left maybe 4 or 5 years ago, maybe. And he's on his own. And he said, look, it's been a real struggle. I mean, he's going to make it. He's going to be fine. He's got a lot of talent. But he's like, man, I didn't realize how much these leads cost and, how crazy it is to spend, if you're spending $40 a lead and you buy 5 leads in a day and you don't sell anybody, you're down 200. It's not only you're making more or making less or breaking even, you lost $200. It is what it is.
Absolutely. Well, it was good to have you join. It was a fun story.
It's a fun story to share, and I can understand why, why some companies are fascinated with, especially business owners, entrepreneurs, other business owners want to hear the story. They want to think, what did you do? How did you do it? And, can you help me in some way, either by being on a board or just being an advisor or whatever. That's fun for me. It seems a waste to just have this knowledge and not share it with people.
I look forward to hopefully skiing and doing some mountain biking together soon.